China is targeting a stable growth rate of 5% in 2024, quite in line with what it targeted back in 2023, where it grew at about 5.2%. But the challenges this time around are all the way more. It wants to transform its growth model, perhaps grow more and grow better. But remember, the 5.2% growth in 2023 came on the back of a low base effect. A lower growth rate back in 2023, Karthik, it may not be possible to emulate that kind of growth rate in 2024. It is dealing with a lot of problems. Some of those challenges we've highlighted here time and again.
Correct. And, honestly, I doubt that 3% low base growth also, over which China, statedly grew at 5.2%, because that 3% growth actually came at a time when there was absolutely pure play lockdown in all of China. So, and China, if you remember, was the last economy pretty much to come out of the zero COVID policy, and it had the most stringent zero COVID policy. But anyway, past data, is bygone. I think what is important right now is that Chinese government was expecting consumption to pick up. All of last year, consumption did not pick up. We saw the mess that the property market, the real estate market created for the Chinese economy, right? With the collapse of Evergrande and a lot more Country Garden, etc., pretty much now waiting in the wings to collapse. So the consumption story in China did not pick up. Add to that mass level of unemployment, about 20% of the country's youth continuing to be unemployed, a double jeopardy for consumption story to, be in that mix of unlikelihood to recover. Now, what the Chinese government wants to do this year is that it wants to issue government bonds worth about $1 trillion yuan, which is about $140 billion worth. And what is the government trying to achieve by this? Number one, by issuing these bonds, you are actually sucking up a little bit of money from, from investors out there, which is obviously in complete contradiction to the injection boost on consumption, which the state requires. So the government is actually going to extract some money from lending institutions in the country and assure them a government sort of sovereign-backed return, and use that money to fund its own capital expenditure and fund its own expenditure on perhaps aiding consumption by perhaps offering that much-awaited stimulus back to the population. So it seems that the government wants to actually suck out some money from institutions as form of government securities, as form of bonds, and push that money out, part of it in capex, part of it in injecting consumption, and continue with its story of growth at about 5%. On the other hand, it has also raised its defense budget, and its defense budget has been increased by about 7.2% this year. Again, in line, in fact, much higher than the government bonds at about 1.6, 1.7 trillion yuan. So we are again looking at almost $230 odd billion, which the government is going to inject into its own defense manufacturing capability. And those investments are likely to again add up in this overall mix of what is going to get the economy to grow at about 5%.
Right,
so consumption does not seem to be the story behind China's growth if it does grow at 5%.
All right, but consumption is what China is looking at the moment. But from that conversation around Chinese premier focusing on security, internal and external, as well as economy, actually sets the template for what China is looking to do this year as well as in the coming decade.
I mean, I think China has always been in the race to continue increasing its defense spends. In fact, after the US, it is the second largest military spender in the world. And now with the Taiwan elections over and that flashpoint which was assumed or presumed to burst into some sort of a real conflict in the calendar year 2024. We are still only in March, but you can never dismiss any sort of aggression from China towards Taiwan. So it needs to shore up its own military muscle. And of course, let's not also forget that it has had issues on Indian borders also on the northeast. So shoring up military muscle is one part of the story, and sucking up institutional finance and pushing that into capex activities and injecting some of that into artificially induced private consumption is something that seems to be the Chinese government strategy at the moment.
Absolutely. Private consumption, upping the capex spending as well as ensuring that there is fresh stimulus, fresh injection in terms of greater spending by people is what the government of China is looking at the moment. It wants to grow at 5%, over 5% in 2024. It's going to be a hard task for the government of China.